There is a small town in West Texas called Pecos. It is hot, remote, and surrounded by oil fields. It is also the unlikely center of a massive global infrastructure shift. Take the CORZ scientific campus expanding here. They are scaling to 1.5 gigawatts of gross power capacity. That equals the electrical output of a mid-sized nuclear reactor, enough raw energy to power 1 million American homes. For 15 years, companies spent billions of dollars constructing vast industrial sites just like this across North America. They needed that massive electrical draw for a single purpose: mining Bitcoin. We tend to imagine the digital economy as something weightless, living in the cloud. The reality is heavily industrial. It relies entirely on highly specialized physical fortresses of power hidden out in rural America. Right now, the companies building the most advanced artificial intelligence models are hitting a severe bottleneck. Anthropic, OpenAI, Meta, they have the algorithms, but they are desperately short on the physical capacity to train them. To train a massive AI model, you need a specific set of physical ingredients. You need high-bandwidth connectivity, industrial buildings designed for high-density computing, grid interconnection rights, and massive amounts of cheap electricity. Notice how these requirements line up. This is the exact infrastructure stack that Bitcoin miners already possess. The crypto sector spent a decade building precisely what the AI industry suddenly needs most. The financial pressure to combine these two industries peaked in April 2024. The Bitcoin network went through an automated event called the halving, which slashed the block rewards paid to miners. Mining instantly became roughly twice as expensive per coin produced. Facing those squeezed margins, these operators realized they didn't have to keep mining cryptocurrency. They possessed the physical infrastructure to train AI, and they were simply waiting for a more profitable client. Look at CORZ Scientific's timeline. In December 2022, deep in the crypto winter, their mining operations stopped making money, and the company filed for bankruptcy. By 2024, they emerged from restructuring with a completely different business model. They signed a massive contract with CoreWeave, a major AI cloud computing company. The deal was reported at over $10 billion, explicitly trading their power capacity to host AI training hardware. This chart breaks down the financial logic driving the pivot. You can see the steady compression of Bitcoin mining margins over the last few cycles. Compare that to the projected cash gross margins on these base AI contracts, which sit comfortably between 75% and 80%. The math is so compelling that CORZ Scientific's leadership announced a strict new mandate. Within 3 years, they plan to dedicate every single megawatt in their portfolio to AI workloads, phasing out their original Bitcoin business entirely. They are executing a massive physical arbitrage. They are trading the extreme volatility of cryptocurrency prices for guaranteed high-margin enterprise cloud revenue. CORZ Scientific is not doing this alone. Public competitors like Hut 8, Marathon Digital, and Hive are aggressively evaluating power portfolios and rebranding for AI contracts. Industry estimates show that over 5 gigawatts of physical power capacity, originally built for crypto, is actively being retrofitted for AI operations. This area chart highlights the sheer scale of that number. 5 gigawatts of power completely dwarfs the footprint of the entire global data center industry as it stood in 2018. By bringing this massive volume of ready-made infrastructure online, these retrofitted crypto sites are providing the physical capacity needed to push the cost of frontier model training downward. With all this North American power moving to AI workloads, you might expect the Bitcoin network security, which relies on that computing power, to drop. It hasn't. This global map shows what is actually happening. The raw computing power, the hash rate, is relocating. While North America focuses on high-margin AI contracts, Bitcoin mining operations are rapidly expanding internationally in places with incredibly cheap electricity, like the Middle East, Central Asia, and Africa. While the physical servers relocate, decentralized crypto protocols like Render and Akash are organizing networks of individual graphic processing units to build an open-source alternative to centralized cloud computing. Instead of relying on a massive corporate warehouse in Texas, smaller developers can use these tokenized marketplaces to rent distributed computing power from users worldwide. The global demand for compute has created two parallel infrastructures. One relies on centralized data centers built by major tech firms, and the other operates entirely on decentralized blockchain networks. Back in Pecos, the concrete walls and high-voltage power lines are the same, but the machines inside are running entirely different workloads, serving different clients. These companies no longer rely on the speculation of crypto market cycles. They are now sustained by highly predictable, multi-year enterprise compute contracts. Those stuck on the losing side are pure-play Bitcoin miners operating in expensive energy markets and AI developers who lack the capital to secure their own physical power. The victors are the adaptable operators. They survived the crypto winter and maintained control over the physical bedrock of the next technological cycle. Writing the best algorithm is only half the battle. True dominance belongs to those who own the power to run it.